And the issues definitely are the Ukraine. And as you point out appropriately, oil and nat gas are global commodities, as are agriculture. Now, what people haven't mentioned is that we have the lowest consumer confidence reading since 2011. So the fire hose opened up as people came out of their homes, they spent, they engaged services. But during that time, we've seen the cost of those go up dramatically. So even the most flush, and I'm not talking about the upper 1%, most flush consumers got to be feeling it now, and there'll be issues. But let's not just talk about Ukraine and Russia. Let's focus on China as well. China had been very noisy in terms of their issues with Taiwan, and they're only taking a step back now because the Olympics are going on. So Putin and Xi, they've met. And she said, hey, we're wishing you all the best in Ukraine, and why don't you keep that going? Because right after the Olympics are over, we're going after Taiwan. And that's going to be the real mother lode because so much commerce goes through Taiwan, particularly technology. So to me, best case, the market risk returns in balance. And I believe that it actually trends more towards the lower in terms of the risk profile and sort of mutes, completely discounts the upper end. So why be in a rush to buy stocks? Sure, they'll be higher in a year or 2 years or 3 years, hopefully. They always are. But in the interim, you can get a much better entry point if you keep cash. As a matter of fact, if you take some profits off the table here and hold some more cash, and that's my bet. That's
how much cash are you talking about, Steve Weiss?
So I've been in between 50 and 70% cash for a while, an extended period of time. And every time I go to buy something, I could have gotten it lower. So every time I've sold something, it's gone lower. It's been a good sale. So I just don't see that ending anytime soon.
Yeah, Degas, you know, I appreciate the comments about the market shrugging off past Russian skirmishes, but this is a market that's already been broken. I mean, the Nasdaq 100 has been below its every moving average, 200, 150-day moving averages for quite some time. The biggest cap tech stocks out there, the FANG stocks, also breaking these trend levels. Is this a market that you can get behind, or do you think, like Weiss, you know, maybe it is time to take a look at the sidelines?
Well, ultimately, what we want to do is identify those companies that will do well in a rising interest rate environment. And we talk about pricing power of companies. You know, those companies that are putting out products and services that are in high demand, companies that cannot be easily replaced, and then also companies that have a very high barrier to entry for their competitors. That's where you want to focus on. And ultimately, you want to identify those companies that have good profitability at reasonable valuation. And you can still find those companies even in this market. And I think, to Steve's point, you want to be very careful in that selection process.